on Putin's agenda for New Delhi. Parikshit.
Keep chasing the sunshine and go out and play.
Happy 26th birthday.
भी लगाएगी तू? देखो है तो देखो.
Happy 26th birthday CNBC-TV18 from the crown.
लाइन दिखाते रहना, वो इन लोगों का बोर्ड दिखाना, ठीक है?
Listen, I wanna be there with you no matter where you go. Life is a table for two, and we're starting the show. I'm gonna spread my wings and fly so high up above the clouds. Simple.
Well, CNBC TV18 turns 26 today. On this day, we would like to thank all of our viewers for your continued trust and support. I'm Ashmit Kumar, and joining me now for a very special conversation is with us the captain of the industry, a leader of the tech space, the CEO of Cognizant, Mr. Ravi Kumar. Mr. Kumar, thank you so much for joining us for this conversation. Again, a very timely conversation, not just coinciding with CNBC 26th birthday, but also coinciding with this transition that we are seeing in the tech space to a new world, to a new era, and also at a time when we're stepping into 2026. So, Mr. Kumar, thank you once again for joining us, for being a part of this conversation. Let me begin by asking you that as you step into 2026, what are some of the biggest changes that you saw in 2025, and what are the key priority areas that you're going to watch out for as you step into 2026?
Thank you. Thank you so much for the opportunity, and congratulations on the 26 years. Here is what I see. In the last couple of years, and 2025 was an inflection point, we saw a evolution of two specific swim lanes. The first is applying AI on software cycles. This is work we did for the last 25, 30 years. And software cycles have now got embraced with machine-led work, machine-led effort. And my personal belief is as more and more software cycles are assisted by machines, we're going to see elasticity of technology help us to consume more. So as you do more for less, you get to do more. That's the first swim lane, applying technology on software cycles, applying AI on software cycles. The second swim lane is applying AI on agentic cycles, which is operations of enterprises. This is new addressable spend because globally, enterprises are going to reorganize and re-architect their operations. There's going to be reinvention of business, reinvention of process, reinvention of workflows, and it will be intertwined.
Mr. Kumar, on the subject,
digital labor is going to be deeply integrated with human labor, and that will be the way forward. So getting into 2026, we're going to see these two coexisting as we go forward.
You've given me three very important cues. Let me take those up one by one. First, let's talk about AI. You talk about the next layer of growth that you're hoping to unlock using agentic AI. What I want to ask is that various reports suggest that the level of AI automation that we are seeing in India is limited to, again, very process automation. It's not maturing. Are you beginning to see that degree of IT spends being made by legacy enterprises that you hope to benefit from going forward in 2026?
In the last 2 years, there's been a build-up of AI infrastructure. AI is broadly in three layers. There is an AI infrastructure build-up on the compute, on LLM access, and we're going to see a significant runway from here to training the models and then leveraging it at inference time or production time. Once we get past that, you're going to see the third layer, which is building applications on top of it. The velocity has been very different. You rightly pointed out, the velocity of build-up on infrastructure is significantly higher than the velocity of its embrace in enterprises. So the bridge is getting built, and we call ourselves companies like Cognizant as companies which are actually AI builder companies on the bridge. So there are two different velocities. One velocity, high velocity on infrastructure. It has happened in all tech disruptions. velocity of infrastructure build-up is going to be higher, and progressively velocity of its embrace on businesses is going to catch up. It's going to happen over the next maybe 1 to 2 decades. The urgency, though, today is because the shelf life of the infrastructure build is very short, because the scaling laws of AI are much lower. I mean, Moore's law, which kind of drove the past tech revolutions, was 36 to 48 months. In AI, those scaling laws are between 6 to 12 months. 6 to 12 months, the technology advances so fast that if you don't actually get the value from the enterprises, the technology will go obsolete. Just to give you an order of magnitude, in a year...
I'll just come in there, Mr. Kumar. I'll just come in there. I'll just circle back to question of what it translates into revenue for you. The question I wanted to ask you is that, again, are you seeing that degree of IT spends? A lot of reports seem to suggest that the ROI on a lot of these investments that are being made on Gen AI-led investments are not materializing in significant returns, either in terms of revenue or in terms of savings. Are you seeing that trend? Are you seeing some degree of hesitancy, or are you seeing greater momentum in 2026?
Yeah. So the billions of dollars which has been spent on AI infrastructure, I mean, just to give you an order of magnitude, in 2025, almost $400-500 billion of infrastructure spend has happened. Now, if you have to get a value out of it, there should be trillions of dollars of value in businesses, and the infrastructure companies have to make 600 to 700 billion for getting a strike rate of 10%. So that trillions of dollars of value has not happened yet. It is going to start to happen. And enterprise productivity will first build up, then societal productivity will happen. And over a period of time, AI, which is kind of on the side, will actually be at the center of everything we do. That's what happened with the internet. If you go back to the 90s, you remember, internet was on the side. Today, internet is in the middle of everything we do. It's in the background. And that's what is going to happen with AI. It's going to go into the middle of everything we do. That productivity will drift into businesses, it will drift into people, it will drift into societies. Now, going back to your question on automation, it's a layered process. It starts with tasks, then the workflows get integrated, then the process reinvention happens, and then there's going to be reorganization of business models. So it's a combination of all of these things which will drive productivity. Productivity is a 10 to 20-year journey. Every year, there's going to be an uplift of it as we go forward.
Right, Mr. Kumar. So clearly there is consensus on the potential that this technology hosts. The question I want to ask you is, can you give us some guidance as to where we are currently? Some picture that you can give, some guidance you can give in terms of your revenue attributable to AI. HCL, of course, has given some guidance. They're measuring their AI revenue at about $100 million. Some guidance that you'd care to give as to where we are, where we stand right now as we close 2025?
Absolutely. We were the first company in 2024 which spoke about how much of our effort is machine assisted. And we started all the way in 2024. And today, my last earnings call, I spoke about how 30% of our code is assisted by machines. That's on the first swim lane. On the second swim lane, which is about how much of it is now moved into operations and agentic capital beyond traditional classical software, we've spoken about multiple proxies. I mean, just talking about AI revenues, it's hard to baseline. Everybody looks at it and measures it differently. So we took a slightly different approach. We looked at revenue per person, margin per person. And we created a 10% bump on our revenue per person and an 8% bump on our margin per person. That non-linearity is explained by AI. So number of projects, percentage code written by machines, productivity, which is driven by revenue per person and margin per person, non-linearity, because you're going to get a 10% increase in revenue per person, 8% increase in margin per person. A combination of all this gives an indication to investors and customers how much we have embraced AI. We are the only company today in our peer group which talks about what percentage of our code is written by machines. And that is because, if you remember, in the last 6 months, we ran this vibe coding hustle inside the company to create a cultural renewal of working alongside machines. And we hit the Guinness Book of Records with the number of coders who used vibe coding tools to assist themselves. So that's the
Right, Mr.
hustle of how you can actually explain to external stakeholders of what AI is. Number of projects,
Right, Mr.
the
Kumar.
productivity,
Speaking
revenue
of
and margin,
benchmarks,
percentage code written by machines. If you layer them
fair
all,
enough.
then you will start to see indications of how much has been impact
Right,
of
Mr.
AI
Kumar.
on
Now, speaking of benchmarks, if not as a percentage of the revenue, can you give us some indication what percentage of your pipeline perhaps is AI contingent, is Gen AI dependent?
So, it depends on where you draw the line, right? I mean, it starts all the way layering from, specific specific standard automation to machine learning algorithms to AI algorithms to then generative AI algorithms. So if you just layer them out, that's how it works. So we've not taken the distinction because I personally believe everything you do today in the technology business will be AI led. So carving that out as an AI thing is only going to be confusing to investors. So what we really did was we looked at indicators which help investors and customers to look at what does it do to our business model. It creates non-linearity in our business model. For the same kind of number of people, we are actually going to get more revenues. Just to give you a sense, between last year to this year, our total year-on-year growth, if you look at our revenue and you look at our people growth, there is a difference of 2%. And that difference comes from AI-led productivity. So we've taken more leading indicators, which are tangible, traceable, and you're able to attribute it to AI versus tagging revenues or pipeline to AI, because that is a very subjective process.
Right, Mr. Kumar. I'll come to you for one final question, of course, and this is one question. Given your wide footprint that you enjoy here in the Indian market will be very relevant for a lot of coders, developers watching you very carefully. So the question is, as you step into 2026, as you're looking at these unlocked potential that AI agents offer to you, through our last conversation, you mentioned that 30% of the code is written by machines. The question I then want to ask is, as you step into 2026, some guidance that you can give as far as hiring, what it may look like in 2026, and whether this 30% of code being written by machines will influence any hiring decisions going forward.
That's a great question. There are a bunch of things I would like to tell the viewers. First, the number of freshers we hired this year is significantly higher than last year. I have a thesis that with AI, you can amplify human potential. If you are getting developers to work alongside machines, they're not going to get replaced. They're actually going to get higher productivity. And at the bottom of the pyramid, the productivity is the highest. So we hired more school graduates, almost 20,000 this year in comparison to last year. That's one. Second, the productivity at the bottom 50 percentile is higher than the productivity at the top 50 percentile, which means it's kind of an equalizer. Third, our ability to create new jobs using AI. Remember, AI is kind of, if you take an end-to-end process, you need human effort at the start, you need human effort at the end. Human effort at the start for prompting, for authentication, and human effort at the end for verification and validation. So the ability to create these jobs will be driven by how much you can use machines in the middle. I'm a big believer that if you do more for less, you actually get to do more. That's one part of the story.
Right.
The second part of the story is,
Right, Mr. Kumar,
look at what's happened
I'll
in the
just
last
have to
25,
interject
30
there.
years.
We've completely run out of time, Mr. Kumar. I'd like to thank you for joining us.
Operations.
We've completely run out of time, Mr. Kumar. I wish we could have stayed longer on this very intriguing conversation on what AI looks like going ahead in 2026. But that's all the time that we have. Thank you so much for joining us. With that, we're heading into a very short break. We'll come back on the other side with the day's top stories on the other side.